Hey guys, this is Market Update. There's a lot of negative sentiment out there at the moment and calls for the end of this cycle. I don't think that, and I want to explain why in this video. I've got a lot of data here, including a lot of short-term cycle data as well. So look, we've hit an all-time high, literally this month, and we've pulled back 9%. It's just absolutely normal price action, right? It's pulling back 9% isn't actually a big move. You can see in this cycle previously, we've had a 30% drawdown. This was a 28% drawdown, right? So these can happen. Now, if we come a little bit lower, you're looking at around an 18% drawdown as we come into that 100,000 level. Now, we've already met support at that level here before we just went to a new all-time high. So are we going to come down and test that again? Unlikely, in my opinion. Now, we have Jackson Hole this week and the speech, and everyone's getting their neck is in a twist about this. Look, there's three options that can happen here, right? And I think one is not going to happen. The other two are likely. So firstly, they raise interest rates this year. That's not going to happen, is it? Okay. Everyone's looking at cutting interest rates. So that's not going to happen. Second, they keep everything the same as it has been for the last year, where Bitcoin is melting up to new all-time highs. So as in not cutting interest rates. Why is that bad? We're hitting new all-time highs in this environment. Number three is they cut interest rates, release liquidity on the short end, and I think that pushes assets higher. So the two outcomes are more of the same, where Bitcoin is hitting new all-time highs and melting up time and time again, or they cut interest rates, which is a stimulus which pushes us up even higher. They're the two outcomes, so why is everyone scared about that? Be brave, be courageous, go in. This is not the end. I'll show you why. If you trade Bitcoin and crypto, the link to Bybit is down below. If you're new on there, click that, sign up, make a deposit, and whatever you deposit, they'll give you a huge deposit bonus to go ahead and trade with all the way up to $30,000. I have a lot of data on the current cycle, so let's crack on. But firstly, the whole entire way that we approach financial markets is completely wrong. The conventional wisdom that we value risk assets in dollars is the same as when we used to think the world was flat. And then someone invented a telescope and it's like, oh, wait, this thing is round and the sun doesn't go round us. We actually go around the sun. And so the whole entire premise of civilization had to change, right? That is this. Since 1971, since the US went off the gold standard, look at the S&P, right? Wow. But down here in pink, the S&P index valued in gold is down 22%. Down 22% versus a rock. All of that energy, all of that innovation, all of those products, everything else is down in value versus a rock you find in the ground. The way we value assets in dollars is completely and utterly wrong. So please, if you value anything, value it in real money. You can use gold. I use Bitcoin. This, ladies and gentlemen, is a currency collapse. This is Venezuela, Zimbabwe style. This is not assets getting more expensive and, providing value. This is just the currency collapsing, a huge proliferation of paper. And so more paper, the assets go up when valued in that paper. They're not going up, right? They're actually gone down 20% since 1971, valued in a rock. So that is the premise of why I buy Bitcoin, right? Bitcoin is real. It's actually real. And paper, the paper of the world hegemon is collapsing. This is a parabola. This is literally getting worse. This is Zimbabwe style. This is a parabola. This is a complete and total currency collapse. Get out of that. Get out of it. Get out of bonds. Get into real money, whatever it is, all right? Even the stocks, they're pricing in most of it. But the rock down here has actually outperformed them since 1971. What's going to happen over the next 6 months then? So the three outcomes. Raise interest rates, highly unlikely in my opinion. Keep interest rates the same and policy the same. Bitcoin's going to new all-time highs anyway in this environment. Or they cut interest rates, just as the Trump policies are starting to inflect some economic activity as well. Well, that goes to new all-time high, right? So that's where I am. So I think we wait, and I think we get into this red box before we can let some trades go. My dollar cost averaging and spot Bitcoin, I'm not letting go of that for a decade at least. So that's my future plan, which I think will happen. This green line here. I made an update to the Crypto Investor course and my 10-year plan. It's just one video update. If you've got the course already, that video has been posted, so you can go and watch it. If you haven't got the course, I'll just link it below. It's 300 videos on investing in crypto and in the modern age, and then I update it for free for existing users. You can check it all out by the link below. Coming to the data for the current cycle, everything just shows that it's kind of normal. We're ranging, not overheated, and that just means that my trades are still on, right? Because the only thing to worry about is if the price gets very, very hot in relation to the trend rate of growth and the moving averages and everything like that. When the price is very hot and high, then you have more of a chance of drawdowns that are bigger, 50, 60, 65%. But everyone says that the drawdowns in Bitcoin are very harsh, but they're looking at the daily traded price. And you're measuring it from this absolutely massive bull market where Bitcoin's gone up like 10, 15x, very, very short time horizon. And so you're measuring from the very high traded price of that cycle that it traded for like a week or a few days. And then you're saying it drew down 17% from that. But if you look at the realized price or the longer term moving averages, you know, the moving averages don't actually draw down. They just kind of go sideways and then up again, right? It matters. And obviously people say we drew down because everyone's got their leverage trade on. When prices are very high in relation to trend, do not trade with leverage. Do not open short-term trading positions. You cannot be very hot in relation to trend and then go double extra hot again, right? So it's the important thing to focus on. If the price is very hot, then your trades, you have to get out of them or not take new trades. If the price is ranging, right, then the downside risk is, well, we might get a normal drawdown, 20, 25, 30%, and then we go again, right? So if you're not hot in relation to trend, why would you go massively underneath trend? Right, so are we on trend or not? Bitcoin here in the 4-year cycle. Previous cycles usually get their blow off tops at the end of the cycle. So we're coming into winter. It's summer now. No one's trading. No one's doing anything. As fund managers and traders come back, you're going to see Bitcoin start to price what it should do for this cycle. I don't think we're going down. Okay, I may be wrong, but the end of the cycle is usually where you get those big moves, and we're just ranging now. So this is the credit cycle. Absolutely everything is credit. This is high yield credit. And you can see it has a very high correlation to Bitcoin cycles as well. So what's the Fed going to do? Not raise interest rates, maybe keep things the same, maybe cut them a little bit. Okay, so does that pop up high yield credit? I think so. And so does that pop Bitcoin? Yes, I think so. Look, we're not overheated. If we're up here, you start to think, look, we can't go again, but we're not overheated. So if we're not overheated, my trades stay on. CeFi plus DeFi lending market size. Are we saying that this cycle is over now? And in this cycle, where all of the institutional money is coming in, you're saying that CeFi and DeFi lending is not even going to eclipse last cycle? And we've topped out for this cycle? It doesn't feel like it. Like, would you be saying, no, we've topped out now? I don't think so. Entity adjusted realized loss. Look, this is a drawdown. We've had a few of them this cycle. We've had some bigger ones you can see here. Maybe we go higher drawdown, right? If we get some bearishness around the Jackson Hole speech, maybe we do, but it just doesn't feel like it. Like, what are they going to do? Not cut interest rates? Okay, so everything's the same, and Bitcoin's just been hitting the all-time highs. So game on, right? They're not going to raise interest rates. So look, drawdowns are just totally normal, actually good, right? As we get these drawdowns, healthy drawdowns, that means that my trades are taking less risk. If we get a huge pop to the upside, right, and everything's really high, you've got to get out your trades, right? So Bitcoin hodler's dashboard, you can see MVRV here, not spiking, right? Not overheated. Short-term holder, SOPA. This is for short-term holders that are starting to capitulate and take some losses. Yes, it can get a little bit worse for sure, but if you think you're in an uptrend, you have to bid weak SOPA, right? Short-term holder MVRV, again, not exactly overheated, right? So are we in an uptrend? Is that the end of the cycle? So we had the end of the cycle is just kind of whimper. Is it a whimper? I doubt it, right? Futures funding rates, not exactly overheated as well. So look, I think we're good. I think we're just having a drawdown in a bull market. And then in the winter, like, what's your over under here? They're not going to raise interest rates, so they keep things the same or lower them. Okay, so probably just go bullish on any price weakness. Short-term holder supply and profit and loss, again, down at levels where if you think you're in a bull market trending higher, you have to bid. And yet it can go down a bit more. But look, this capitulation was a great time to buy, and so was this. So any weakness here, you have to go in if you believe that we go higher in this bull market, and the fiat Ponzi, has to inflate itself again, which I believe. Look, I'm not a LARP, all my money's in this trade, but I would suggest that you get your own conviction and not borrow mine. I could be wrong, and if I am, I will get completely wrecked, but I'm in this trade 100%, and I believe I'm right. I think we go higher. We're also starting to see some expansion in economic data as well. So manufacturing PMIs above 50, services PMIs above 50. This is the whole point. This is the inflationary part of the cycle. We need this. So they want to run GDP hot. They want to run inflation hot. That's the whole point. The Trump admin said, wait till Q3, Q4. It will start coming through. The whole point is to run these things much hotter than the rate of interest that you pay on your debt. And that's why they're pressuring the Fed to cut interest rates. They want to debase the debt. That's the whole point of the fiat system, is to debase the previous debt. This is what they want to do. This is what they're doing. This is inflationary. This pushes asset prices higher. We're in that part of the cycle. Yes, it will be inflationary. Yes, the next bear market is when this inflation starts to climb higher. We are in an inflationary period. Massive inflation is here, so you can't be in the bonds or the cash. Right? This is the whole point. The backward-looking inflation data will have a lid kept on it because it's lagging, and it's looking at the rent indexes, which are all going to start deflating, keeping on deflating, whilst this stuff starts to inflate. And then the next part of the cycle is this stuff's so high, inflation's so high, the rent indexes start picking up and the backwards-looking stuff starts picking up. That's when they start raising interest rates into that again. But it doesn't matter what the interest rate is. It matters what GDP and inflation is in comparison to the interest rate. Don't cut rates then. Irrelevant. Keep them at 4.5. Run GDP at 6, 7. You can do it, right? Print the money. Get the money in from Europe, Japan, Korea, Middle East. Pour the dollars in. Get GDP higher. Screw the Fed, right? Doesn't matter. Whatever your interest rate is, irrelevant. Let's run it hot. Let's debase the debt. That is what they're doing, right? And that means if you're in cash or bonds, you're going to get absolutely destroyed. You have to be in real money. A strong flash PMI adds to signs that US businesses have enjoyed a strong third quarter. 2.5% annualized rate needs to go higher. So strong third quarter. I'm really scared that we're in a bear market. What are you talking about? Go higher, right? Go much higher. Come back after the summer, put your trades on. We're going to go much higher. You can see manufacturing PMI, right? Best in 3 years. And you're worried about a bear market? You're worried about the Fed? Like, oh, we're going to raise interest rates. You're already offside. You're already at 4.5. And GDP is picking up to 2.5 now. Stay the same. Or cut interest rates and let's ramp it to the absolute moon, right? So no, I'm not scared. I'm not worried. I know the game here. The game is this Ponzi scheme is absolutely unraveling at faster rates. The amount of currency units that are going to enter supply over the next decade cannot go down. It's actually going up at a higher rate. So I'm in real money, and that's that. And for my trades, if I get stopped out, so be it. I think, right, they know the game. We all know the game, which is to ramp inflation and GDP higher, print money to debase the previous debt. And so that's what I'm in. I'm not a LARP. All my money's in this. I suggest you do your own research if you want to put money in it as well. Don't listen to me. If you trade, Bybit deposit bonus down below. Anything you deposit on there, they'll give you a deposit bonus to trade with. Crypto Investor course, I did update it last week. If you got the course, that's a free update for you. Link below as well. I'm James, Money GG. Cheers for watching, and I'll see you in the next one.